Hello and welcome back to this video. This video presentation is an aid to help the trainers as well as the new learners to understand about the various books of records and transactions of the cluster level federation promoted under the National Rural Livelihood Mission. This video presentation is part of the detailed CBO HR training that is being organized by the National Rural Livelihoods Mission in different corners of the country, so that the human resources of the cluster level federations are trained and they are able to perform to their best abilities to ensure that the cluster level federation is able to achieve its objectives with efficiency and effectiveness. Let's begin right away. Ideally, following books of records are to be maintained in any CLF for its smooth functioning. There are the primary books of records and then there are the subsidiary books of records. What are the primary books of records? The meeting minutes, the vouchers, the cash book, journal, the general ledger and the loan ledger. And what are the subsidiary books of records? Here they are. There is the DCB, which is the demand and collection book. Then there is the check register, stocks and assets register, membership registers, share capital register, purchase and sales register, and staff payment register and the defaulter register. Let's now move on to understand the different kinds of files that are important to maintain in the CLF office. So as you can see on the left, there is a detailed list of files which should be maintained. For example, loan disbursement, order register, loan reschedule files, bank statements, bank reconciliation statements, and there is another list on the right as well. So in total, these are the different kinds of files that should be maintained in the CLF, specifically with reference to the financial records. Let's now understand the accounting cycle principles. As we know, various books and files and their utilities are maintained by the CLF, and it's very important to know the process of maintaining it. And for that, we need to understand the accounting cycle and the basic principles that govern it. First, we'll understand the steps of the accounting cycle. As you can see, the first step is the transaction which takes place between the CLF and its vendor, or for that matter any other entity. The next step is the recording of that evidence, which could be in the form of bills, vouchers, payment vouchers, receipt vouchers. Next is entry into the primary books of records, subsequently entry into the subsidiary books of records, and then classification of the transactions and their consolidation or summarization, and finally preparation of the financial statements. So these are the steps of the accounting cycle in a nutshell. Let's try and understand each one of them separately. Transaction is the first step before starting accounting. So what is a transaction? Let's say, for example, if a CLF purchases stationery worth 50 rupees from the stationery shop vendor, the transaction between both the parties are the following. A, the CLF giving 50 rupees to the vendor, and B, the vendor giving stationery to the CLF. The transaction only gets completed when the exchange of stationery and money happens between both the parties. It should be associated with a supporting document like a bill, cash memo, etc. Which brings us to the next topic, which is the record of evidence. Why is record of evidence required? Because that is the proof that this transaction has actually taken place. We have to maintain vouchers to prove that the transaction has happened, and vouchers could be of two types. In case it's a payment, then it will be a payment voucher. In case it's a receipt, then it's going to be a receipt voucher. The voucher necessarily have to be accompanied by bills or a document which proves that the transaction in question has taken place. How does someone ensure the transaction which has taken place between the vendor and the CLF has actually taken place and that there is no collusion which is involved? That is where maintaining a voucher becomes very important, because this is the point where the governance of the CLF comes into the whole cycle of accounting, and it authorizes and validates the transaction and ensures that the transaction has happened in accordance to the true value and also the norms of the federation. Let's first understand what are the primary books, what are the principles of writing or entering into a cash book, and also why is it called a cash book. It is important for us to first understand the term immediate transactions. So any transaction which is immediate should be entered into the cash book in the form of its monetary value. It should be done whenever it happens and with immediate effect. But In case the CLF receives the stationery or for that matter any material and does not pay immediately but commits to a payment at a later stage, the transaction then is not immediate and cannot be mentioned as a payment of 50 rupees in the cash book. The day the CLF makes the payment, the value should be entered into the cash book. And as usual, these values can either be receipts or payments. So the main point is that the transaction has to be immediate and it can be either through cash or check. Let's move on. We now come to the second set of the primary books, which is the ledger entry. Now, what is the principle of the ledger entry? We do a lot of transactions in any time period. Ledgers are maintained to firstly understand the specific category account, which we call the head of account, its trend of transactions if required. Secondly, it reduces the complication of searching for transactions in a particular head. We call this stage as the classification. As you can see from the classification, there are receipts from sales of items, from CIF received from the SRLM or repaid back by the VOs or the SHGs. There are bank interest which is received from the bank, membership fees received from the members, and then on the other hand, you've got payments like salaries, rents and CIF paid to the VO. And each of them is classified into different heads like salary, sale, CIF and rent account. So this is what is the principle of ledger entries. Now we'll understand preparing the receipts and payments sheet. What is the principle which governs the preparation of the receipts and payment sheet? After we prepare the head of accounts, we find out which are the receipt heads and which are the payment heads. And the balance figure for a particular period is taken to the receipt and the payment statement. We call this stage as consolidation. We now come to the next statement, which is the income and expenditure sheet. So what is the difference between receipt and income? And what is the difference between payment and expenditure? Out of all the money received, incomes are those which are the CLF's own money and CLF does not need to repay to others. Others' money, which is a liability to the CLF and will not be considered as an income. Similarly, any amount which rotates within the CLF are payments and they are non-returnable in nature and therefore are called expenditures. Now we'll understand preparing the balance sheet. Question is, what is a balance sheet? How is it prepared? Balance sheet is basically defined as the balance of the heads of account which the CLF owes to others till date, known as liabilities, and the balance of the heads of account which the CLF owns itself are called assets. Simply put, any amount which is to be given to somebody else are liabilities and any amount which the CLF will receive are called assets. Profit, loss and unspent grants are all liabilities and till date assets and liabilities have to be the same. Why are accounting cycle principles important? It is important for the CLF accountant to be very well versed about these principles and processes of accounting in order to maintain the books of records of the CLF smoothly, in order to uphold the value of transparency in the CLF so that the member, the governance can easily understand what transactions are taking place, when transactions are taking place, what is the nature of these transactions. And that is why it is important for the CLF accountant to be very well versed about these principles and processes. This brings us to the end of this short video. We hope that this video will help you in understanding, along with the training that you're receiving and the manual that you have with you, to understand the accounting process and principles easily. We hope you have a great time training the SRPs and then the CBO HR. Till then, best of luck.